This is Jordan. This video is being recorded and published on the evening of Sunday, December 10th, 2023. Thank you so much for tuning in. In this video, just going to give you a quick look at gold and silver. Not going to talk about the miners this week, just because I'm more focused on gold and silver. We'll get to the miners in next week's video. But starting off here, we have the weekly candle chart for gold at the top, silver here, and then we have gold against the S&P 500. And so in last week's video, of course, my sentiment was bullish. It was high. And I mentioned, we could get a snapback to 2,000 in gold. This is a bearish reversal. This is not a snapback. It's obviously much worse. And then looking at this in silver, I mean, this is a really nasty bearish reversal. I mean, look, this engulfed the previous 2 weeks of gains, closed below the equivalent to the 200-day moving average. So that's really the most important takeaway with respect to the reversal is look at silver's reversal compared to gold. I mean, if silver had a small reversal, I think it would tell us that maybe the market would correct for a couple weeks or a month and then it could head back up. But this kind of reversal, this is something that, and looking at some history, I mean, it portends to at least, I think, a month or two of weakness. And you can read, go on TheDailyGold.com. You can check out my article. There's some data from SentimentTrader.com where they're tracking reversals in gold after it hits a 52-week high. So this was a new 52-week high. The reversals that I think fit best with where we are here and now are those that occurred, and this is in gold, from 2001 to 2003. And in all those cases, gold usually is about a 2-month correction, although sometimes it may have bottomed after a month. In the market, gold, that is, 2001 to 2003, after those reversals tended to bottom around the 200-day moving average. So this is the equivalent to that. So we're right at 1960. This is sloping up. So this looks like it's going to get tested. We'll see how the gold market acts. I mean, one scenario is it's going to come down, test this. Maybe you get a bounce. You get, another successful test of the moving average, and gold kind of bases, and then it's going to, make another attempt at 2100. Or you have the other scenario where, I mean, this could be something deeper where you test the 200-day and then you get a rally, but then it kind of peters out and then you fall back here below the 200-day, and then, you could kind of come here to, 1910 or 1920. So those are two potential scenarios. Whether you're looking at the daily or the weekly chart, now it's clear 2100. I mean, this is the gateway to a bull market. Yeah, we did have this strong weekly breakout, weekly all-time high, monthly chart, really strong, convincing close. We got those, but it just happens with this market. I mean, you can have 95% of what you need and it'll somehow go the other way with the 5% chance. But with that being said, now it's clear 2100. This is the resistance. You take it out on a daily and weekly basis, then you're off to the races. Then you're in a real bull market. And for silver, that's 26. Now, silver, I mean, this is a worse reversal in silver. So my suspicion is gold probably breaks 2100 and then silver lags and, it'll break 26 after gold breaks 2100, but not immediately after. I'm just guessing. But it's clear here. I mean, if you're look at silver, whether you're looking at the daily, weekly, monthly, quarterly, even the yearly chart, they all show 26 is really significant resistance. It's also the 50% retracement of all-time high in silver, excuse me, and, the all-time low in modern times in the early 90s, from 3 and change up to 50. So 26, this is a key level for so many reasons. It's good that we came up and tested it, but gosh, this is such a nasty reversal. So silver had established 22 as support so many times, but now, it's probably going to test 22, and then, maybe it comes down and below it briefly, and, then you have support just below 21 in the 20s. So I would, at this point, I'd look to gold first, more so than silver. Okay, so gold against the S&P 500. This is also a concern. I mean, this is, not the best looking chart here, but, if you look at this on a daily chart, this could crack and break down a little bit here and test this low. And by the way, the S&P, the stock market, what do you know? Made a higher high. It's trending higher. So that is going to hurt gold a little bit, I think, in the short term. And it's just it's becoming abundantly clear that, you know, for gold to really take out 2,100 and then go to 23, 25, 3,000, for silver to take out 26 and follow gold's course, you're going to need to see some stress and turbulence in the economy, in the stock market. I think we're headed for that this coming year in 2024. But, you know, who knows? It could be 1 or 2 months away. Maybe it's 6 months away. Maybe it's 4 months away. I'm not sure at this point. But I do think it's highly likely that we're going to run into that at some point this year, this coming year. Then you see gold take out 2,100 and silver take out 26. But here and now, you know, as we head into the end of the year, this reversal, you know, I wouldn't expect, you know, anything really bullish, you know, into the end of the year. So I know it's a change from last week, but, you know, and I know at times, you know, 1 week it seems bullish, the next week it's bearish. I know it's not pretty, but, you know, listen, the market, that's how the market is a lot of the time. And that's how it's going to be until gold takes out 2,100 and silver eventually follows and takes out 26. So, you know, thought we were there last week, but no cigar. That's all I got to say in this video. Let me know what you think. Leave a comment. Talk to you guys again in the next video.